Up must come down, including the stock market. We just don't know how and when it's going to happen. So how do you time your tactics to keep your savings secure? Jim Lineweaver is here with information to help you evaluate your options. Jim is a certified financial planner professional with the Lineweaver Financial Group. Welcome back to the show.
Thank you.
There's been a lot of issues happening over the past few months that could make investors just a little shaky, I'm guessing.
Yeah, not just a little bit. I might get some tremors out there, but yeah, it's actually been extremely volatile. When you look back in the summer and with everything that was going on with Greece, and then you had China slow down, you had them manipulating the currency, you have the ISIS issues out there because of our low interest rates and other things in our economy. We have a strong dollar, which is hurting our exports. There's a lot of turbulence and a lot of misinformation out there. And then also the Fed with their decisions over the last several years with what they've done with interest rates and stuff. There's been a lot of uncertainty. And when there's uncertainty in the marketplace, what it does is it leads to a lot of volatility, and where you get these big swings in your portfolio. And even just in the third quarter of this past year, the S&P and the Dow both gave up almost a year and a half, year and 3 quarters worth of gains within 1 quarter. So now a lot of that's been regained, but needless to say, you can see the volatility, and I think this volatility is here to stay. Yeah,
well, we should expect that, right? That market is going to have that volatility and decline at some point.
Yeah. We'd love it to always be up and to the right and everybody be multimillionaires, but it just doesn't work that way.
All right.
So you do have to make sure you're planning ahead of time and being proactive, not reactive to the market these days.
All right. So prompt us on how we prepare.
Yeah, well, when you look at things in the market, like take, for instance, back in 2007 to 2009, there was a couple years there where the actual stock market fell 57%. There's not too many people that can just survive that, especially if you needed to live on some of that money. So actually, we can actually provide a stress test for your portfolio. So what that'll do is say, okay, let's look at what you have, and if the market goes down X, what would your portfolio go down? And maybe you can isolate some of those areas, because sometimes your portfolio may actually go down more than the overall market, depending on what your holdings are, but it also may go down less. But it's good to know that going in. But what you really want to look at doing is trying to figure out, do I have other income producing things or things that I can rely on, so that no matter what's going on in the market, I may receive dividends, I may receive interest coming in, I can cover my cash flow. But the last thing you want to do is have a 30% correction in the market and say, I need some of that money to live on, because it's going to cannibalize your portfolio.
It might be the worst time in the world to take something out of there.
Exactly.
So how do we make that determination whether or not we have enough to keep from having to sell off something that is at the bad time, in case the market does take a dive like that?
Well, one of the things you want to look at is a rule of 100 minus your age. So all it does is says if you're 70 years old, then take 70 minus 100, and you can have 30% of your portfolio at risk. So you can have things that look at it for a time horizon of maybe 4, 5, 6 years. So if you do get that correction, you're just going to put that off the table, you're going to let it ride, and you have other sources to have coming in on a monthly or annual basis to get your income that you need.
It sounds great. Any other quick tips that you have for our viewers?
Also, make sure that you have emergency reserves set aside. So, if you're married, and what you can do is maybe go down to 3 months of income set aside, but if you're a single, really get out to that 6 months. Make sure you can fall back on that, maybe not have to fall back on credit cards in an emergency situation. And also for big expenses, make sure you go ahead and anything that you're going to purchase in the next 2 years, go ahead and plan for it today and take those off the table so you're not affected by the market volatility.
All right, thanks for the advice. Are you ready for an upcoming downturn? Follow Jim's advice to assess your assets. Need more help? Give Jim a call. His number's next.
For more information, call the Lineweaver Financial Group at 1-888-313-4009 or click to www.lineweaver.net. Next,